Hey guys, it's Josh with the Construction CFO, and today I'm going to show you how to forecast cash flow for any construction business. I'm going to focus this towards subcontractors, but if you're a general contractor, you do a BIM, you do architectural engineering, anything, this is what you need to watch, and you're not going to learn this anywhere else. Nobody teaches this in college or on YouTube that I could find. So if you like this content, please like and subscribe. Share this with somebody that needs it. And with that, let's get into it. I will be honest, this is going to be a little bit of a longer video. We're going to get through cash flow forecasting immediately, but there's a couple things I want to address afterward to what actually affects it. So this is the cash flow forecast that I've built. I'll leave a copy in the description if you want to download a free copy. But what we're going to do first is we have to know what your burn rate is for your overhead. So if you aren't collecting any money, we need to know how much does it cost you just to run the business the way you have it set up today. That means your office rent, your electric, your internet, your softwares, your business development team, your website, anything that is not attributed to a project that makes you money, but it's an ancillary thing that's required to be in business. We're going to look through all of those. So you fill out all of the peach or yellow cells. You go all the way to the bottom, and the way that it works is it calculates what's my weekly total, because some expenses are weekly, like your payroll, your benefits, things like that, and some are monthly, whether that's your softwares or your salaries, depending on who you all have, you can put them in different columns. But anyway, what that gets you is it shows you what's your total. This adds together your total annual expense for overhead. And what I want to show people when I do this for them is this means that this $619,000, this company should be $6.2 million to be at 10% overhead. Because they only did $5.6 million, they were at 11% overhead. That's not a problem. It just means that on change orders, when you're only allowed 10 and 5 and you're making 13.3%, that really you're only making 2.3% profit. And that's if everything goes right. So that's the most important thing. This tab will feed into the 12-week forecast, and this is the next step. This is what you guys came for. So we start at the top. We go with the date. We're going to go with the Monday. So last Monday, 29th, right? So we're going to do 9/29/2025. What that does is every one of these weeks, it shows the following Monday. So when we started this week, we had $70,000 in our bank account on Monday the 6th, right? So what you're going to do is any costs that happened this week, this Friday, or next week are going to happen next week. That's where we time them. Any money that's coming in. So we'll say project 1. This is where you're going to have $120,000 coming in the third week of the month. Now, that's a worst case scenario. We want to plan for what does the contract say? We need to hold people accountable to that, because at the end of the day, I could sit here and say, well, I'm not going to collect it for a year, but you won't stay in business. That's the problem. Doesn't matter how profitable you are. If you don't collect money, you can't spend it. You can't spend fake money. So what we do is we know that a prime contract for a general contractor is plus it's 30 days from the end of the month. So your invoice is due on the 20th of the month. By the end of the month, they give it to the owner and it gets approved. And then 30 days later, they get paid, and then they have 10 days to pay you. So what that means, if I build September 20th, October 1st, it's due to the owner. October 30th, 31st, that's when the owner pays the general contractor, and 10 days later, November 10th, is when I should be paid by. So, again, these are Mondays. If this $120,000, I should put it under this week 1, right? Because the 10th falls between the 6th and the 13th, right? And it's not a weekend, it's a Friday or a Thursday. So then the next one, the 200,000, that's going to happen on the 10th, that Monday. It's going to be probably that week, but that's a worst case scenario. It should be paid the week before if they're going to meet their deadline, or they're going to pay you on a Monday, which nobody does. But we're going to put it in there for the 10th, just for the example. and then $250,000 on the week of the December 10th. So that's our income. Now I can do that per project. I can make this by division. I can make it by general contractor. I can make it by whatever I want, by project, name, number, anything. And there are up to, I want to say 45 cells in there that you can use. Feel free, you can add more. But when it gets that large, I like to do it by divisions. It gets a little confusing when you're trying to update all of them. Now keep in mind, this is not what you build. This is what you're going to collect. So if there's any retention taken out, you need to make a retention line item that subtracts out 10%. That way you're not anticipating collecting 10% more than you should be. Then we get into, that's your cash in. How much money is coming in the business that I can spend? Think of this as like personal finance. This is your paycheck that you get paid on Fridays. If you get to Thursday and your Netflix hits, but you have $0 in your account, you're going to default. That's the same thing with a business. That's why people are stressed about it all the time. So we go down to the next one. Cash out. This is guaranteed cash out. We're spending this no matter what we do, right? Our rent has to be paid whether we have a job or not. We have subscriptions that have to be paid unless we're going to cancel them. But it doesn't matter if there's a project happening that week or not. Administrative expenses, that's going to be your office staff. If you have an accountant and they're on staff, you have a project manager, those people get paid salaries, right? Doesn't matter if there's no work. Maybe your field people can be put off for the day if there's weather. But when it comes to the office, that's not an option. You have your own equipment, and this is idle. So anything that you have sitting at the office, whether it's a trailer, maybe it's fuel for a project manager that's not to a job, those kind of things. Insurance, I like to advocate to pay insurance monthly. Some people like to just pay it outright in the annual, but it's a lot harder to save up, $12,000, $13,000 to pay out at one time for a $2 million contractor than it is to pay a couple $1,000s here and there quarterly or even $900 a month. And then you get into non-direct job expenses. In this example, I don't have that. And that's going to be your business development, estimating, people like that, miscellaneous, and crew. Now, anything that's not on that tab on the overhead calculator that we want to consider, we have other things down here. And I always talk to people about CFO, like this is what it would cost if we worked together. Here's how much, here's where I'd put it. I can show you the monthly when it's due, all of that. Maybe you have BIM. Maybe you want to hire somebody in project management later on in 2 months, and you want to see how that's going to happen. I don't get to that part till later for the what ifs, but if this is maybe it's a one-time thing where you have all of your insurance due at one time, I take it out of the other tab. I put it in here for $15,000 because I know it's due in October. So that's cash out number one. We have 3 places we're going to do that. The next one is project expenses. These are variable, but the consistent part I can tell you from all of the experience I've seen is we know how much our labor is going to cost us. We know we have 30 people on payroll. We don't know which job they're going to go to, but we know they're going to go to some job unless there's a weather event. And if there's a weather event, depending on who you are, how you run your business, you're probably not going to have people going to work. So you're just going to save a little bit. But we plan for worst case scenario in this case. We want to show as much. We always plan worst case scenario on here for the most expenses and the least amount of AR. That way we know that it's pressure tested. We have a little built-in insulation, because if we want to sit here and act like, well, construction always pays on time. I get paid net 15 and my guys can knock that out in 2 days. And it really takes them 2 weeks. That's where we run into other issues. So we run through our labor. The way I calculate this one, I don't have the equation up there. Let's say you have 10 guys. They do 40-hour weeks, and they get an average of 32 an hour burden rate. You just put that together. Overtime, I know it's going to be 1.5 times 32. I just have to take how many hours. Maybe they're doing 10 hours a week. Put that in there. Material, we look at our AP and our AR report. This is important to keep up with your accounting. So what this shows you is, when do I owe these materials? And maybe it's net 30. And I want to pay people in net 30 But if I'm not paid until net 60, I can't keep paying people net 30. Otherwise, I'm on the hook for everything. And that's a whole nother topic, whole nother video. We'll get into that another day, I'm sure. But just know I align these with the payment that they're coming through. And we moved that 120,000 earlier, so I can move this 30,000 up to align here. And I don't have any other expenses. I pre-purchased everything. It's on site. This is just the last invoice lingering. All the rest of it's just installing. The next one we get down to, we have some other material. Maybe this is miscellaneous stuff. Maybe this is, I have Home Depot runs I know I need to do that I'm just estimating this is how much it's going to cost for wood forms because I don't pre-purchase some of this stuff. We have a section for subcontractors. Again, when I put these X's in there, you can add more if you want, do whatever you want with it. I've tracked PO, I've tracked type of material, I've tracked the vendor because all of their invoices can lump together. I track the subcontractor and rental equipment. I like to have all of those separate because it helps you process through your mind as the owner, where is this money being spent? Not just, I think I have 30,000 going out this month. It's, okay, I have 10,000 for this, 5 for this, and 20 for this. Helps you prioritize what's important. So you go through and you time all of that. When are things hitting? Again, week 6, we know that if we use it this month of October, that this 25,000 is going to hit in November and it's due 10 days or whatever your rates might be. That's cash out number 2. The third place that money leaves your account, and a lot of people skip over this part, is it's where you owe money. Your credit cards, your owner's draws, maybe you have bonuses, you have loan repayments, you have vehicles, you have sweep accounts, whatever you have. This is where I put the money where it comes out of your account. So we know we have a loan repayment where every week we're plugging along, putting $170 into it. We have a credit card payment. It averages $2,500 a week, or bi-weekly. So we put it in there like that. If you know that there's going to be a ramp up for something, you put that in there too. But normally, credit cards, the way I like to use them is for fuel only, not material. And then we get into other. This is an example where I had a sweep account with a client. So they owed $18,000 back tied to that other, at the top, it was tied to that payment. So as soon as it came in, it paid off their sweep account as it came in. And that's basically your cash flow, is money in minus money out. And that gives you a delta. So that delta is, did I bring more money in than I spent, or spent more money than I brought in this month? And that's represented here. You can see we made positive 46, we lost 24, we lost 40, we lost 24. So what happens when we lose money so many months consecutively in a row and we become negative? That's where we have one last resort that we have to plan, and this is your last resort for cash in. So the only way you can make more money than you invoice for in a given time period is to loan or to have some kind of factoring or something built out. Places that I've worked with are Build, you have mobilization funding, banks, I mean, whatever you kind of want to work with. There's so many options. You just have to talk to your loan officers around and find out. But the way that this works is I'm looking at the bottom. I don't want money to go below $25,000. That's what the owner of this company felt comfortable with in their bank account. That's 3 weeks of payroll for them. Just in case something happened and money doesn't come in on time, they have 3 weeks that they can still work. Well, I see this first week I'm going to have $116,000 in the bank account. Worst case scenario, that's really awesome, right? And then 91, then 51, then 27, then I'm starting to hurt, right? Like it's dwindling. This is when you get to the end of the month. This is why we do it the last week of the month. We start to get frustrated. I have all this money due next week. When am I going to, how am I going to make payroll? What am I going to pay? Did I overpay on something I shouldn't have? So all this tells us when we're planning is we need to move expenses. Either I'm going to delay some payments if I can. Overhead, you can't. Rent, you can't. Payroll, you can't. But material, maybe you can work something out. Your loan repayments, maybe you Maybe you pay early. You paid early. Maybe we have this 170 that we're paying recurring. We can stop for a little bit. There's a lot of things. Or maybe we take out of our sweep account and we take 21,050 plus 7,500 because we always want to have 700 or $7,500 in our bank account at all times. That's just the way we want it to work. Now, whenever I collect money, I have to pay it back. So I put it back up here, 28,750 plus, we'll say we're going to take it times 0.05. A little 5% in there. I didn't get the times symbol. There you go. Times 1.05. There. So we're actually going to pay $30,000 back because we loaned it. That's the way interest works. It's not always, even if you have an annual rate, you're going to get charged weekly, daily, whatever as it accrues. So that just comes out automatically. We still have 108, then we have 53, and we're running into the same issue. But you can start to see, just talking through this, we can now, we're in week 8. We're talking about Thanksgiving. We're talking about beginning of December, and this is end of September. We can at least have time to plan and adjust for this. We still have our sweep account. It's paid off completely, but it has $270,000 on it. We can still use it, but at least we're not living or relying on it every single week, every single month, hoping. And what I like to really hone in here is when we look at this, we see we're supposed to collect. We were going to be negative. We took out our sweep. We're supposed to collect. If the owner paid this the week before like they're supposed to per contract, then I don't have an issue. But if they pay the week after, I have an issue that's my problem. And if they even delay another week, because let's be honest, general contractors don't give a shit. Nobody cares if you get paid or not. They go on vacation. They say, oh, it's wrapped up and like the project manager hasn't accepted it, whatever it might be. So if I move that over, now I have another one. So this is just a red flag that tells me I need to send a notice of non-payment. And if you don't know what those are, I can make another video to show you what that means. But this is all cash flow forecasting is. So when it sounds complicated and it's scary and it's a lot of work, it can be. But I run through these every month with our clients. And I'll make another video to kind of show how do I know that this is even accurate? How do I know what to even find here? But just high level, this is what you can do this, and then within 30, 60 days, you will never have another cash flow issue again, assuming you're making money. And that's where the other aspects go in. Hey guys, thanks again for watching. And if you want to see what the steps that I do before I get to cash flow forecasting, so I know that my forecast is accurate and my job costs are up to date and I'm doing things right, check out these 2 videos.